Hi, I'm Dr. Russ Wallers. This is a video overview of the first weekly module, and I thought what we do in this short video is go through some of the terminology that's covered in the first chapter and introduce a couple concepts that I think relate to both the first and the second chapter. So I hope you enjoy this. Um, in the first module overview video, we're going to tackle several topics. First, we're going to start with a discussion of the general concept of marketing in terms of a definition. What is marketing? Then we'll move to a discussion focusing on participants in the marketing functions. Then we'll talk briefly about what the typical marketing functions are, followed by a discussion of the marketing concept, and very importantly, we'll move to a discussion of defining our target market. Following that, we'll take a look at the marketing mix and follow that with a discussion of marketing strategies. So that's our lineup for this first brief video. If we ask the question, what is marketing? Marketing is defined in our text as the performance of activities that seek to accomplish an organization's objectives by anticipating customer or client needs and directing a flow of need-satisfying goods and services from producer to customer or client. Seems rather vague, and it takes in quite a bit of waterfront. We're talking about a range of activities that we'll talk about in a second, oriented to basically satisfying customers. In effect, marketing bridges the gap between the production sector and the consumption sector. If you look at this slide, on the left side of the slide, you might notice that there are discrepancies of both quantity and assortment regarding goods and services demanded by the customer at the consumption sector level, and quantities and assortments preferred by the production sector. Companies prefer to produce in large quantities. They produce products efficiently using economies of scale to create those efficiencies. They also like to produce assortments that are efficient to produce. So what the production sector, what the company prefers to produce from a production standpoint may be different than what the consumer wants at the consumption level. Consumers want smaller quantities and they want mixes of assortments that are based on their market basket needs. So marketing does one thing to bridge that gap. On the right side of this particular graphic, you might notice, and this ties into the material in Chapter 1, that there's a spatial separation between producers and consumers. There's a separation in time, separation in information, separation in value, and a separation in ownership between the production sector and the consumption sector. And one thing that marketing does quite well is bridge those gaps as well. Consumers want products where they want them, when they want them, and the quantities they want them in. And marketing bridges the gap between the production and the consumption sector in those regards. Looking back at our definition of marketing, marketing applies both to nonprofit and profit-oriented organizations. We'll use examples in this text and in our discussions that deal mainly with business enterprises of a profit-oriented nature, but a lot of the concepts that you'll be studying also pertain to nonprofit organizations as well. Another issue regarding marketing and our definition is that marketing is often thought of as mainly a promotional activity, and in fact it's a lot more than just trying to persuade consumers. It deals with a whole range of activities that are much broader than just advertising and sales. That's a very important point in that first chapter. Marketing begins with a focus on customer needs. We'll talk a little bit later about the marketing concept, and that is a big issue in this first and second chapter. Marketing is also a function that needs to be coordinated with production and financial activities. I think the authors of our text make the statement that marketing doesn't play it alone, and what they mean by that is that it needs to be coordinated with production and financial activities. There's a synergistic effect between these activities, and the decision making has to be interrelated. And marketing fundamentally involves exchanges. It involves exchanges between the firm and the customer. Customers are important to the extent that they have needs, and they're willing to exchange something of value for products and services. So at the very root of marketing is the need for the customer, whether it's a business customer or an ultimate consumer, to be involved in the exchange process. Regarding the question of who performs marketing functions, certainly the producer or marketer is one element in the marketing arena. At the bottom of the marketing channel are the customer, the consumers. These could be ultimate consumers or business customers. And intervening between the producers and consumers, we have a number of intermediaries. These are firms that specialize in trade rather than production itself. And in this specialization in trade, these intermediaries execute tasks related primarily to buying and selling. Those are the intermediaries involved in the marketing function. Primarily wholesalers and retailers, and we'll talk about those in a couple later chapters in the latter part of the text. There's another category of firms that are involved in marketing functions, and in the textbook we refer to these firms as collaborators, and these are firms that aid in the exchange process and provide marketing functions other than simply buying and selling. Here we're talking about such firms as advertising agencies, marketing research firms, independent product testing laboratories. We could be talking about internet service providers, transportation firms, and so forth. So those four categories of firms are basically the firms that comprise those involved in the marketing functions. Looking at it graphically, we have producers and consumers. There are the intermediaries, consisting basically of wholesalers and retailers and other related specialists that are involved in trade, buying and selling. And then the additional firms shown there in the orange or the yellow are the collaborator firms. In terms of defining typical marketing functions, universal functions of marketing include a number of activities, including buying and selling as part of the exchange transaction, also transportation, storage. Both of these functions involve logistics within the supply chain, and these are marketing functions. Also standardization and grading, financing. We think of financing as a separate function, but there's a lot of financial tools used in marketing. Anybody involved in marketing is involved in risk-taking, and also marketing research and various types of marketing information. So those are some universal functions of marketing that we'll be studying throughout the course. A very important idea in marketing has to do with what we call the marketing concept. Regarding the question, what is the marketing concept? The marketing concept is, in effect, a perspective that all of the firm's efforts are aimed at satisfying its customers at a profit. It's a customer focus, and it's based on several assumptions. One assumption is that the customer is the target of the marketing effort, and customer satisfaction guides the entire organization. Second assumption is all of the firm's functions, which include marketing, production, and finance, are guided by this perspective. Not only marketing, but production and finance also understand the importance of that customer orientation. A third assumption is that the firm's survival and success is involved in generating revenue and turning some type of profit. In the case of a not-for-profit organization, we're talking about survival. In the case of a profit enterprise, we're talking about profits, maybe profit maximization, product satisfaction, whatever the goal is. But the marketing concept is, it's not a benevolent philosophy that focuses only on the customer. It also recognizes that the firm has objectives. So that is, both customer satisfaction and the firm's financial objectives are important outcomes in the marketing process. Graphically, the marketing concept consists of three components. It focuses on customer satisfaction. It involves a total company effort. And it also involves some type of profit measure or profit outcome. And the intersection of those three elements captures the essence of what we're talking about when we talk about the marketing concept. Another important issue is, what is a target market? A target market basically is a term we use extensively in marketing. A target market is basically a group of customers to whom the firm wishes to appeal, and it is the focus of the marketing resources aimed at the marketplace. The target market could be the mass market, a product that has mass market appeal and appeals to everyone, or it could be one or more specific smaller market segments, perhaps niche markets. Another term that's very important is the marketing mix. And the marketing mix is basically a term that relates to or refers to the set of marketing decision areas controllable by the marketing manager. The marketing manager operates in a decision arena where there are some elements that are controllable. There are certain environmental elements that are not controllable. Now, if we consider the controllable elements of the marketing arena that the marketing manager has some control over, this is what we're talking about when we refer to the marketing mix. And the marketing mix includes basically four elements. It includes product decisions, pricing decisions, promotional decisions, and placement or distribution decisions. Product decisions have to do with deciding what products are to be produced, what services are to be produced, packaging decisions, warranty decisions, those types of decisions. Pricing decisions involve the price of the product, the terms of sale, shipping terms, a whole range of pricing decisions are involved. Promotional decisions involve the strategic blending of promotional tools available to the marketing manager. These could involve advertising, personal selling, sales promotion, and public relations and publicity. So there's a blending of promotional tools we often refer to as the promotional mix that constitute these promotional decisions. Placement decisions have to do with transportation, storage, those types of issues, and we'll talk about all of these in a later chapter. We often refer to the marketing mix as the 4 Ps. So if you see the authors talking about the 4 Ps of marketing, they're referring to the marketing mix. And these are the 4 controllable areas used by the marketing manager. Finally, the question could be posed, what is a marketing strategy? And this is a very simple concept, a very important concept. A marketing strategy is basically the big picture of what the firm intends to accomplish within the marketplace. And it consists of basically 2 components. One component is coming up with a specification of the target market. That is to say, who are the customers that the firm is aiming its resources at. So the first component of developing a marketing strategy is to specify the target market. The final component is to develop a marketing mix, which is the strategic blending of those four controllable decision areas: product decisions, pricing decisions, promotion decisions, and placement decisions. Those four elements need to be internally coordinated and developed with an eye toward what the needs of the customer within the target market is. So really, if you stop to think about it, any successful marketing strategy that you might consider consists of those two components. The questions are, has the firm done a good job in identifying the target market and truly understanding the needs of that market? And secondly, have they developed a marketing mix, a strategic blending of product, price, promotion, and placement decisions that address the needs of that target market? It's a very simple idea. It's difficult to do, but the concept is very simple. So that, in a nutshell, is what a marketing strategy is. We'll talk about this concept of the marketing strategy in a lot more detail in chapters 2 and 3 of our text. But for now, I thought it would be useful to introduce that term. So if we try to put this all together, some of the concepts that are introduced in the first chapter. Marketing involves a total company effort that is oriented towards satisfying customers. Very simple. And that's guided by that marketing concept philosophy that we talked about. It involves coming up with a product or service that offers some competitively superior value to the customer. If that's done effectively, that should attract customers, that should develop a market, and the goal is to satisfy customers. Firms are oriented toward not only attracting new customers, growing new business, but also customer retention. Customer retention is really critical, and we'll talk about the importance of that later. It's really nothing more than common sense, but in a nutshell, you could say that the marketing manager attempts to do two things: attract new business and retain and satisfy current customers. The ultimate goal of all of this is to build profitable customer relationships, and that's really the end goal. When we talk about customer relationships, the text distinguishes between looking at marketing as ad hoc transactions, but more importantly, it makes sense to look at the long-term relationships that marketing develops with its customers. So in effect, that's sort of what we're talking about in this entire course. Finally, this is true for not only this first module, but the modules throughout the text. Make sure that you look at the key terms at the end of the chapters. These are terms that are used quite extensively in marketing and help us understand the various concepts and principles that are introduced in each chapter. And there's a summary of key terms in the chapters. There's also a glossary in the book that provides sort of a compendium of all of the key terms. So these are very important to consider. So that wraps up our first introductory Module 1 overview, and as you go through the rest of the modules, we'll be developing some overview modules for each one, and the purpose of these are basically to provide sort of an introduction to the material in the module. So keep an eye out for those. We'll be posting those as we go through the course, and again, if you have any questions or you need to get a hold of me, feel free to drop an email or give me a call. And if you have any questions, let me know. If you have any concerns, let me know those too. Anyway, thanks a lot, and we'll talk to you later.